Today we have a very special guest, our mortgage expert, Andrew Norwalk from the Choice Mortgage Group. Welcome, Andrew.
Thank you, Ori. It's great to be here.
Buyers always ask me the same question. We want to buy a house. Where do we start?
Well, everything always starts with the application. Generally, I like to jump on a call with the buyer just to kind of get a feel for their scenario. You learn a lot more when you start off talking to somebody than just sending them to your online application. A lot of times you'll find out different things that they may not have shared with you if they just went into the online application right away. Once I've finished my fact finding, then I'll send them to the application so they can start entering in their information as accurate as possible, which then leads us to requesting documents from the information they provided. Once we get that, we can build a file, run the numbers, and try and figure out exactly what type of scenario we have and what type of financing we need to do.
Could you tell me who is your dream buyer? So what would you say people need to even start thinking about buying a house? Is it 2 years of stable income? How much down payment? Do you have a dream buyer you love working with?
I mean, everybody always likes someone with 800 credit scores and plenty of money for down payment and closing costs. But truly, there's a loan out there for everybody. Whether it's they have 3% down or they have 50% down. There's plenty of options. I think the perfect buyer is somebody that's responsive and wants to work hard to try and get into a property.
So when I go out to show buyers houses, they like to wait with pre-approval because it's not the most fun part of the process of buying a house. Why do you think pre-approval is the most crucial step of buying a house?
It's pretty much where we figure out whether or not they can buy the house. I mean, the last thing you want to be out there is showing somebody a house, maybe getting their hopes up, wasting their time to buy a home that they don't qualify. So it's important to find out whether or not it works.
And the best part of pre-approval, that any house I show you, you can just buy. Andrew, what's the difference between pre-qualification, pre-approval, and desktop underwriting?
So a pre-qualification is really something you might get when you go to your bank, somebody you've banked with for a long time. They have some assets there, they have information that they have on file, their income that they've put in, what their credit score may be, or maybe they have an application that looks at their credit score, and then they spit out this letter and says you're pre-qualified. But they haven't looked at any of your income docs, they haven't looked at any of your assets specific to the property, they haven't looked at your employment history. The difference between that and pre-approved is we're gonna gather all of those documents, we're gonna build a file, we're going to run the numbers, and we're going to send it in through Fannie Mae or Freddie Mac's underwriting system, which is DU, as you mentioned, desktop underwriter, or LP, which loan prospector, which is Freddie Mac's tool. So we'll put it in there. They'll tell us whether the information that we've inputted makes them an approved eligible buyer to buy that property. So getting pre-approved is almost like getting pre-underwritten. We take it another level and we pre-underwrite them to make sure that whatever we say they can do at the beginning is what we're going to do at the end when we get them to closing.
What are the biggest do's and don'ts when trying to qualify for a mortgage?
There's not a lot of things to watch out for other than common sense. After you get pre-approved, don't go out and buy a yacht or a Ferrari. That's the biggest one. And actually stay away from those throughout the entire transaction. You don't want to do that until after you've purchased the home and you want to go celebrate and buy your car or your boat. Go for it. Don't buy furniture, don't buy anything until we've closed and you have the keys in your hand. Obviously, don't move jobs in the middle of a transaction. That makes things very complicated. Don't lose your job during the transaction. That ends the transaction. Also, money moving around. We have to source any large deposits. So we want to see money that's been sitting in account for 60 days. We call it being seasoned. So we want to see the assets sitting in the account.
So how far do you look back on the bank statements? You mentioned 2 months seasoned, or do they ask to look further back?
If it's just sourcing assets, then we're going to have 2 months bank statements. But if they see something on there that may trigger them to ask for additional statements, and when I say they, I mean the underwriters, they may ask to go back further. So if you got 2 months of bank statements and the assets have been in there and there's no issues, then really you're pretty much good with that.
What is the first stack of documents you would need from the buyers?
Not every borrower was created equal. We have to jump into an application with them and find out, are they self-employed? Do we need tax returns? How many years do we need? Are they a W-2 employee? Do we need 2 years? Do we only need one pay stub, 30 days of pay stubs? Everything kind of depends on the questions that we ask and the answers that we get. By doing that initial application on the phone and then on the online application, we can kind of figure out where we need to go and what documents we need.
What is happening with mortgage rates? Is this a good time to buy? Where do you think all of this is going?
We have seen an increase in applications starting 2025. I think people have finally come to a spot where they're ready to move forward. People were talking about waiting until after the holidays, and then they were going to wait until after the election. Then they were going to wait until after the new year, and then they wanted to see what the election did. And nothing's really changed with the rates. We're kind of hovering in this 6% to 7% range, depending on the type of loan. Most experts think that we'll probably be in this area for at least the next 6 months to a year. As rates tend to come down, it's going to get a lot more competitive out there. So the best day to buy real estate is yesterday, because you're cutting everybody else out that's trying to get in front of you and get that property.
It's true. Once the rates go down, a lot more buyers are suddenly qualified, and that creates competition and multiple offer scenario. So time to buy is now, or yesterday. Historically, where are we with the interest rates?
Historically speaking, we're at a pretty good spot. If you look at rates over the last 40 years, I think we're kind of sitting at almost at an average for where we've been. Rates have been as high as 18%. A lot of people are a little bit skewed or jaded because we had rates in the 2s and 3s, and everybody wants that or expects that. And I think that was kind of an aberration. Being in the 5s and 6s is a healthy place for our economy. I think it's probably where we're going to play for the next couple of years.
When it comes to down payment, how much do you realistically need to buy?
So there's programs for everyone. There's down payments for everyone. Like with the VA, you can put down 0%. Conventional first-time home buyers can put down 3%. FHA, first time, 3.5%. The more you have for down payment, the more it makes the transaction a bit easier. The more they put down, the better their rate can possibly be, the lower their monthly payment.
When it comes to condos, what is the minimum down payment, especially in Miami area? What have you seen? There's
not a lot of FHA approved condos, so we really don't focus too much with FHA when it comes to condos. With conventional, if the building has everything in order, you can put down as little as 3%. That means they got to have their reserves. They can't have any deferred maintenance. They can't have any structural issues they're attending to. They've got to have done their 40-year inspection. There are instances where we can put down as little as 3%. If for some reason they don't meet some of that criteria, they'll either have to put 25% down on a primary residence, or they can do a combination of a first and a second and put down as little as 10.01%. We can finance up to 89.99% with a piggyback second. Beyond that, if you start buying it as a second home or investment, some of the percentages start to change.
Can you use a HELOC on down payment of your next home?
Yeah, absolutely. Once you take the funds out of your HELOC, it'll go into your debt to income calculations. So, you can pull money out of, let's just say, your existing primary or another property, and you can use it towards cash to close.
Where are we in condo market when it comes to financing?
Yeah, it's definitely getting tricky out there. A lot of condos are trying to get to be fully funded reserves, getting all of their assessments or renovations that need to be done for the building. So it is getting a little bit more tricky. There's really, for us, there's a 3-step process where we start off with our in-house delegated underwriting so we can try and get our borrowers the best rates. If we find something wrong with the building, then we may go to a secondary investor that may not scrutinize things as much. If we can't get it done there, then we have our non-QM market, which is our secondary market. And they'll allow some of the red flags that maybe Fannie or Freddie say that a project is not financeable. So with them, we may take somebody with a building that has a higher deductible for insurance, or maybe doesn't have the reserves, or it's considered not warrantable for some reason. We can take it to this secondary market, and there's lenders that will finance on these properties. So really, you just have to really do your homework. About 20% of our transactions are with condos. So I'd like to say in a challenging condo market, we're as close to being experts as possible. It's going to take a lot of work. It's going to take an HOA that's willing to participate and get us the documents that we need. We're getting them done and happy to work on them.